Brown is the reporter for the Wall Street Journal who wrote The Cult of WeWork, Adam Newman and the Great Startup Delusion. I am guessing, sir, that you are not surprised by the substantial doubt of WeWork's ability to remain a going concern.
I would say it's been a long time coming. They've been sort of limping along for the past 2 years or so since the pandemic. But really, yeah, I think they've basically been hit by this 1-2 punch, where the first you had this sort of startup bubble and the excesses of the venture capital era of the 2010s brought by low interest rates, and you had a lot of crazy things going on there, and now you have them really succumbing to the change in office demand from the pandemic, where there's this huge work from home trend that has brought down office rates, and they need office rates to stay high if they're going to stay in business.
Because fundamentally, the demand for what WeWork does, I suppose to some extent, we learn we can do it from home. Now, there is always this idea of it's better to be collaborative and it's better to have an office, and therefore, you have your offices at WeWork. But if we don't need offices or we don't have the same demand, then their raison d'etre is no more.
Yeah, I think WeWork's business model is itself adding on to that this huge amount of risk, where essentially what they do is they sign a lease with a landlord saying, I'll pay you X rent, and then they go and find tenants for offices and kombucha that pay X times 2. And so what's happened is rents for everyone have fallen, that everyone's willing to pay, because no one's using offices anymore for 20% of Manhattan or whatnot. And so that brings down rents. And so that means they're stuck paying high rents to their landlord, and their tenants, the startups who drink kombucha, they're not going to pay a good enough rent to let WeWork in turn pay the landlord.
Right. So why don't they just go bankrupt? I mean, admittedly, it would wipe out, admittedly, the shareholders, and it would wipe out that, but it would also allow them to renegotiate, if they wished, those leases and those debts. It would all go into the bankruptcy.
Yeah, they certainly haven't used that word, but that seems certainly an option of where it's headed. I mean, if you look at what's happened, they're burning through $300 million of cash a year, and it's a 13-year-old company at this point, and still has not been profitable. And so the next step, like, they only have like $600 million of cash or so left, so you can do the math. Something's got to change.
Should we feel sorry for them? How much of all of this is there? I mean, when it happened, when WeWork came along, it was a bloody good idea. It offered us something that we didn't think we knew. They didn't create the idea of service offices or whatever, but they certainly popularized it. And now they're really in deep, deep trouble.
Yeah, I think it's important to remember that their growth and the reason that they're everywhere, it was subsidized. It was subsidized by this euphoria in venture capital, where venture capitalists essentially deluded themselves and us all that Office Space was a tech company, that scooters were tech companies, that shoes from Allbirds, that was a tech company. And so they poured money into this stuff, building WeWorks everywhere and signing leases at high rates. And so now we're sort of in the hangover phase, where we're realizing that office space is office space.
So if WeWork goes, or at least falters and falls over, what is the demand for office space? Because you'll have seen yesterday, of course, that one of the reasons Bank of America, I think it was, downgraded, or whichever bank it was going to downgrade banks. In the Moody's was going to downgrade banks, was because it said problems in the commercial real estate sector. So that's not going to change quickly.
No, office. I covered the office market for years, and office is the trends move slowly because people sign these 10-year leases. So I think that what's we're going to see in the office market, and then which clearly is to some extent spilling over to the banking sector, is pain for a long time to come. And you see the really established landlords that even after 2008 avoided defaulting on buildings, like Brookfield and Blackstone. they're defaulting on buildings. They're just saying, we're not going to repay this, guys. We'll take the reputational hit and walk away from these towers in downtown LA. So I think the sort of expectation is that we're just at the beginning of a cold winter for the office market.
Eliot, very grateful. Thank you, sir.